Hi everyone, this is Michael Kramer of Ma Capital. Today is Tuesday, September 23rd, and it's around 4 p.m. New York time. Not really going to be a lot going on the rest of this week. Wednesday, September 24th, we'll be getting new home sales. We'll be having a 5-year Treasury auction later that day. On Thursday, September 25th, we'll be getting our usual round of initial jobless claims data. We'll also get the revised numbers for GDP. These really aren't likely to move the market very much. The only thing that we might see a little bit of a movement on will come on Friday, September 26th, for PCE and PCE headline readings. Core PCE expected to rise by 0.2% month over month, down from 0.3. The core PCE year over year index is expected to be at 2.9%, flat with last month. PCE headline expected to rise by 0.3, up from 0.2. And the year-over-year metrics expected to rise by 2.7% from 2.6. And then a little bit later that day, on Friday the 26th, we'll also be getting University of Michigan final sentiment readings for the month of September. They were pretty bad the first time around, so people will be paying attention to see if they improve it at all. And really, when we think about what's likely to move the market, the PCE number is probably the only thing that's really going to be moving the market around. I think specifically when it comes to FX. I mean, we've seen the euro kind of try to move higher here. It's been really a slow go with it, though. But after making a really sharp breakout last week, we saw the euro come back down, really, and now trying to regroup again. At least when we look at the 10-day exponential moving average, you can see we're trading right along it, really just right above it, and you can almost say that it's acting as support right now. And so we could make an argument that as long as the 10-day exponential moving average can remain supportive, it maybe perhaps can help to push the euro higher. But for right now, 119 clearly the big level of resistance. Big level of support comes at around 116. If we break out above 119, there's room to run towards 123. But until that happens, I think we're still in this wait and see mode with the euro. It started to look like we were getting some traction in currencies, but all of a sudden that's kind of cooled off a little bit. The pound has been one currency that hasn't really been strengthening versus the dollar, and that's because we're seeing, problems in the UK, and rising bond yields with a falling currency is usually a sign of negative implications when it comes to fiscal policy and things of that nature, and perhaps stagflation. But again, in this case, we've seen the pound really come off after trying to get above resistance at 137. 137 is really the key, because if you can get above that, then there's really not much holding you from getting back to 142. But right now, we're back below the 10-day exponential moving average. We have to assume that that's going to be resistance with support somewhere around 134. And again, I think at this point, you're kind of just waiting and watching, because if rates keep going higher in the UK and we keep seeing the currency weaken, that's a really bad indication of where the direction of that economy may be heading. And even in Japan, we're not really getting very much traction. Actually, it's kind of odd, because it looked like we were going to break on the 17th. It looked like the yen was finally going to break through, and then all of a sudden the yen kind of reversed course and we're back to where we've been. I think the really odd thing is when you think about the yen and the euro and the pound, and you see that despite, the ECB talking about potentially being done cutting rates, despite the fact that the BOJ has indicated it will continue to raise rates, and you even had 2 members dissent and were in favor of raising rates at the previous meeting, you haven't seen any of the currency strengthening versus the dollar. And I think that's a very telling sign that perhaps the reason why they're not strengthening versus the dollar, despite what really fundamentally should be leading to strengthening, could be because the market is anticipating a change in trend, and the market is starting to think about the dollar beginning to strengthen versus these other currencies. And the only reason why I think that may be is because perhaps the dollar is thinking that Fed rate cut expectations may be too deep, or that maybe interest rates on the long end of the curve are going to be heading higher and they've come down too sharply. Whatever the case, watching how these three currencies trade, I think, is extremely important, because the longer they don't strengthen versus the dollar in an environment where you would think they should be strengthening, it's really, I think, a signal and a sign that the dollar may actually begin to strengthen versus them. And you'll actually see the euro, pound, and yen begin to weaken more against the dollar, and something to keep in mind as we move forward. Gold, again, has moved up a little bit. We've seen it surpass that 3,700 level we were looking at last week. Again, when we look at gold, there's certainly room for it to go higher, 3,800 or so. But this RSI is extremely overbought at 78.3. When you look at it on a weekly chart, it's overbought at 76.2, up above its upper Bollinger Band for 4 weeks in a row. When you look at it on a monthly chart, the RSI is pushing 89.6. The last time it looks like it was at 89.6, or maybe 91 was back in January of 1980. And then before that, you got to go back to 93.99 in May of 1973. So you're kind of talking about some real historical levels here when it comes to where gold is currently priced. And we can see that the periods that followed, there was a little more upside, but it wasn't necessarily a great time that followed. Gold is also overbought when you look at the Bollinger Band. So on a monthly, weekly, and daily basis, you could argue that gold is not only overbought, but extremely overbought. And the likelihood of this continuing on like this just seems highly unlikely. But it's not to say that it will go down, but what it is to say is that perhaps one should be a little bit careful in terms of what they're thinking about when it comes to this. I think last week we touched on Tesla, noting that it had become overbought. And you can see that it certainly has slowed down in terms of moving up. In fact, I think last Wednesday when we were doing this, it was 425. And today it looks like it closed right around 425. So we're basically marking time at this point. I would say that for Tesla, obviously we've passed option expiration, and that was probably a major factor in this. I would continue to think that you're probably going to run into pretty strong resistance in this 450 area, just because this was the old highs up here around 465. And again, we're still in this overbought zone. I would say we're probably not as overbought as we were, but it looks like maybe there's some room to maybe move back towards 451 or so. But I think resistance in this area should be pretty strong. And in the meantime, use the 10-day exponential moving average as a support region. If we break that, I think you could move fairly quickly back to the 20 and maybe even all the way back into the 300s. When we take a look at the DAX, it's not really oversold. It's not really overbought, just kind of in the middle of the trading range. Again, when we kind of look at where we are, there's the potential for a triple top pattern to have been created. There's certainly the potential here that we could break out above 23,700 and move quickly back to 24,235. And there's almost as equal a chance that we break below 23,410 and start really heading lower, maybe all the way back to 21.3. The question really becomes is which way is it going to break? And that's the really hard part, because again, when you look at where the exponential moving average is, it has been trending lower, and there has been fairly strong resistance at this 23,760 area. So it might be best to see if this actually breaks out before making a judgment call on it, because if it breaks out, it probably increases the likelihood of a further extension. And while if it doesn't break out, then you can probably think that we're going to be testing the lower bound again, if not breaking through it. The FTSE really hasn't done much of anything. We really haven't really seen very much out of copper either. So again, not really surprising from that standpoint. Here's your 10-day exponential moving average. Momentum is clearly fading. But for right now, support's 91.50 and your resistance is around 93.25. And I think it's probably just range bound until we get something a little more decisive. The NASDAQ has also gotten to pretty overbought levels. Here it is on the Bollinger Bands. It just came back within it today. RSI just went below 30 today. When you look at the NASDAQ on a monthly chart, you can clearly see that the NASDAQ is trading above the upper Bollinger Band. RSI up there at 75.6. So again, we're overbought. You can certainly find plenty of cases where RSIs have been higher and we've been above the upper Bollinger Band. August of 2020 was one such period. We ended up having a mild pullback of about 8 or 9%. We also saw similar conditions in the summer and fall of 21. And you can see similar times even in 2014, but it didn't really stop the index from going higher. So while these conditions tell us we should be careful, they don't necessarily tell us that we're due for an immediate pullback either. But for right now, I mean, the 10-day exponential moving average, I think, is the key. As long as you hold above that, the trend is going to continue higher. If that breaks, then that can begin to change. And it really needs to break for more than a day. We've seen it break for a day or 2 days. It really needs to break for like 3 or 4 days. And there really needs to be some sign that it's moving away from the moving average, not breaking lower and then moving back towards it. It needs to be some convincing evidence that you not only broke it, but that you're actually heading away from it, maybe towards this lower Bollinger Band. So we'll just have to continue to watch how that plays. And then when you look at the SPX, again, very similar setup. You're still above the 10-day exponential moving average. The trend is still your friend. If you break below the 10-day and you start moving away from it, then you're looking for the lower band at 63.40. The one thing that's maybe out there going into September 30th, we have that JP Morgan collar that expires. It's a very big collar trade that gets put in place as a hedge. And that's sitting around 6,500 on the S&P 500. I think it's 6,505. You can see the big levels of open interest there, and that may sort of act to pull the S&P 500 down towards it as we get closer to the 30th, something to keep in mind. And finally, with the Dow, again, trend is your friend. Uptrend in the 10-day exponential moving average. If that breaks, then we can start thinking about maybe 45,100 or so. But until that happens, you just got to stick with the trend going higher. Anyway, hope you found this helpful. We'll see you again next week. Bye.